record this. Okay. It is Tuesday, April 18th. All right. So we're just looking at the calendar. We had chapter 2 homework due yesterday. We had, today we have picking your company. I'm going to go out and look at everybody right now. We've got we got the quiz, and we've got Thursday, we've got extra credit again, 11:30 in 201. So click on that and get your details. And she's going to talk about, Marissa Hugh Weller is going to talk about her careers in law. That's her background. And she's also going to talk about, the Justice Reform Initiative. She currently works and has been working for Microsoft for a long time. And Microsoft is partnering with police departments to make some of the data that they gather bring attention to the fact that there's some injustice in our police systems, and to help them with the racist policies and help to reduce the racist practices, not policies. Okay. So it's a lot about law, and it's a lot about using data to make us more equitable. Okay. So on Thursday night, you all need to go out and get your financial statements and upload them. So remember, so let's go look at our class. Okay. So let's go to people. Can you see the home page here, everybody?
Yep.
Okay, great. Thanks. So you come to the home page. I'm going to do student view so we can switch over. Okay. So it tells you everybody that's in your class, and then we're going to go click on groups. And you can see that you need to sign up for your tests. I know we're all taking the test at the same time, but this is my way to get you to acknowledge that you're coming to campus for the exams. Okay. All right. So here's our exams. And then you scroll down and you see teams 1 through 6. Okay. And we've got McDonald's and Starbucks. We've got Yum brand, which includes Pizza Hut, Kentucky Fried Chicken, and I think Taco Bell. And we've got Domino's Pizza, we've got Cheesecake, and Darden. Darden owns the Olive Garden, Brinker, and Campbell Soup, and Hormel. Okay, so you can see your name. So let's see if you guys are signed up. Arian, are you signed up? Yes, you are. Cheesecake and Darden. Jabril, are you signed up? Let's see.
No, I'm not. I'm with Chandra now.
Okay, awesome. Talia.
And it gave me the same message too on the assignment again.
Okay, good to know. And Talia, are you signed up?
Yep, I'm for the Starbucks one with McDonald's.
Oh, great. Okay. And Angelina, you are signed up for. I do not see you.
I'm in the Jack in the Box one.
Oh, great. You know, I used to work there.
Oh.
A long time ago. Okay, so that is the assignment that's due tonight. Pick your company, okay? And then you go back home, or you can click on the calendar and go to units and modules. And we're here under chapter 2 still. Chapter 2 homework, chapter 2 quiz, chapter 2 practice, and says, sign up for your project. Sign up for your project team. Okay, we're going to do that. We just showed how to do that. I'll move my face over. And then here, the company analysis project. Obtain your financial statements for your 2 companies. Okay. All right. So
I had a question on this.
Yeah, go ahead.
So the financial statements that I found for my companies, like you said in the email, I was talking to you about it. It didn't have cash in one of the balance sheets.
Yes.
I can't control that, but is that going to affect the outcome of this assignment, or is it just?
No, it will not affect the outcome of this assignment. That is a very unusual error. And after you guys have all uploaded your financial statements, I will provide you with the balance sheet that has cash on it.
Okay.
Okay.
Thank
but
you.
I want you to go through this assignment so you know how to get this data.
Yeah.
But
okay.
Pretty bizarro. So so there are There's a short video of how to overview of the project, and then here's a short video on how to get those statements, or you can click on how to access financial statements. So let's go back to people. Go to people and wrong people. Let's go to groups. And Talia is telling us she signed up for McDonald's and Starbucks. So you always have 2 companies per team. And the goal of this project is for you guys to use what you're learning in the textbook, apply it to a real company and 2 companies that are competitors. Now, you may not think McDonald's and Starbucks are competitors, because McDonald's, we think hamburgers, and Starbucks, we think coffee. But they're both essentially fast food restaurants, and McDonald's does a lot of coffee at their place now, at their restaurants now. So we're going to compare the financial health of McDonald's with the financial health of Starbucks. We're also going to look at the business model of McDonald's and the business model of Starbucks. So we're doing 2 projects for both of these companies. Okay. So Talia says, how do I get the financial statements? So right here, this document is step-by-step instructions. So you click on the document and you follow these instructions. Step 1, go to sec.gov. Step 2, click on company filings. And you can print that document out and use it, or if you guys don't have printers, put it on one screen and kind of go back and forth if that doesn't bug you too much. You can also watch this video that walks you through that as well. It's just a video I made during my office hours, so it's not a great video. Once you found the statements, you cut and paste them into a Word document. Now, the statements you're going to be getting for each company, and I hope you guys can see this. So what you're going to get for each statement is 3 statements for each company. So for McDonald's, you're going to get an income statement, correct income statement. You're going to get a balance sheet, and you're going to go back and get the previous year's annual report and get that balance sheet. Okay. So 3 documents per company, 6 documents total. Okay. So income statement, I'm sorry, 4 documents per company. What was I saying? You got the income statement. You've got the statement of earnings. So sometimes the income statement is called the statement of earnings, so don't be confused. You've got the current balance sheet, then you go back to the previous annual report and get their balance sheet, and then you go 2 years back and get their balance sheet. Okay, so let me show you that really quickly. I don't want to spend our time here because I do have a video, but you go sec.gov. And the SEC is the Security and Exchange Commission. Come up here where it says company filings. And if we go back to groups, I'm going to click back here. So look at McDonald's and look at Starbucks. When we look up statements for a company, we use what's called their ticker symbol. So the ticker symbol is an abbreviation. So for McDonald's, it's MCD, and it's unique to McDonald's. For Starbucks, it's SBUX, and it's unique to Starbucks. Okay. So let's look up Starbucks. We're going to key in SBUX. Up comes Starbucks. We're going to click on it. And we're going to come to a very busy page. Okay. We're going to come to this box here. And all of this is in the step-by-step. View filings. And we're going to click on form type. Now, what you need to know is the annual report on this website is also known as the 10K. So here's the filing. Here's the 10K, and then we're going to go to interactive data here. We're going to come to this, make it bigger, sidebar. We're going to click on financial statements, and here they are listed here. So we want the statement of earnings. We do not want the comprehensive income, no comprehensive. So click on statement of earnings, and here's Starbucks. And income statements show 3 years of income statements. So we have 2022, 2021, and 2020. Okay. Revenues are at the top, and then all these expenses are subtracted until we get down to this number, net earnings. So think about that, guys. 32,250 and net earnings 3,283. About a 10% profit margin. Okay. Oh, down here, 3,281. Okay. All right. So then you're going to copy this and paste it into a Word document. But we also need the balance sheet. We're going to do that too. Get that whole balance sheet down to, down to, what's my total? Let's look at total assets. 27,978.4. And we'll go down to here, 27,9, and you copy it that far. Okay, or you can take the whole thing. So that's 2 documents. Now we have to go back out to here, get the previous year, interactive data, financial statements, and all we want from that year is the balance sheet. I'm going to copy that and put it into the Word document. And then we want 2 years back. Go to interactive data and get 2 years ago balance sheet. So 4 documents per company, total of 8 documents. Okay. Any questions on that?
I did have one question.
Yeah.
Does it matter like what the order is? Like I noticed on for the homework, like it would give you an order and then in the book it would have like the assets first and then in the other one like different examples that are just like assets or expenses, like they're just, does it matter or no?
Are you talking about a balance sheet?
Yeah, for
Okay.
either one of them.
Okay. Yeah, the order does matter. We can go over that in a few minutes. And so, okay, so that's the first piece. That it should not take you a long time. Do not work on this project for 11 hours like one student did. Should plan on about 45 minutes to an hour. When you paste it in, put titles on each of your statements. So before each statement is listed, list the company name and then your name, but for sure the company name on each page. Okay. All right. Okay. So let's go back here. So that's what's due this week. And then let's look at the classified balance sheet. Okay. And then maybe do some practice problems. Does that sound good? And then Angelina, let's take a quick, let me answer your question really quickly. There should be a link to, let's go home. Angelina's asking, is there a Zoom link for the event on Thursday? So let's go to the extra credit link. So units and modules, scroll down, extra credit. And don't have it here. So that's right. You have to go to assignments. Sorry, guys. I rearranged it this quarter. So go to assignments, student view. Now, a real easy way to find all the extra credit is to come here and say show by type. And then it gives you unit 1, unit 2, unit 3, projects, and then extra credit. So here's Marissa. There should be a Zoom link. I will add a Zoom link to this, guys. So I'm going to make a note. Add link to, it's going to be live streamed. Okay. So I will add that. All right. Okay. So now that we're on this page, let's go to the Wiley course resources. So Jabril and I went over this a lot yesterday, but I think it's worth repeating. So as you're reading the book, and I'm assuming nobody has a physical book, go ahead and launch the book online and be really comfortable working your way through this book. So this is the table of contents. So we're going to go there. Scroll down to chapter 2. And you can start reading chapter 2 from the beginning. Or you can skip over to classified balance sheet. So let's skip over to classified balance sheet. Okay, so I'm going to close the table of contents so I have a bigger reading pane. And I'm going to take my picture and put it in the corner. Okay, so what Jabril and I were talking about yesterday was there is a great example in chapter 2 of a classified balance sheet. And the classified balance sheet for assets has 4 sections: current assets, long-term investments, property, plant, and equipment, and intangible assets. The current assets, all of these are listed in what they call order of liquidity. So what is your understanding of what the heck that means? What is order of liquidity?
Is it how easy it can be turned into cash or like usable capital?
It's how easy it can be to turn into cash or already be cash. So good, Arian, and good, Adam. Yes. So let's look at this. Cash is already cash. Cash is the most beautiful account. Cash gets to come first. Okay. Just gets to come first because it's already cash. All right. So let's talk about these. So I'm sorry they put debt investments there, but it's there. Another, if you can possibly print this out or handwrite it in a neat form for you to use for your reference, that would be awesome. Okay. Because along with debt investments, you could have stock investments. Okay. And for when you're first learning accounting, that's a little confusing because you've been already taught that debts go with liabilities and stock goes with stockholders' equity. But the key word to focus in on is investments. Okay, what's an investment? What's an investment? So if a company has a lot of cash, should they put it in their checking account or should they put it somewhere else? So your goal is not to have your cash just sitting there with a very low interest rate. And checking accounts usually have a very low interest rate. So a lot of times companies will go and buy stock in another company. They'll just buy stock in another company. And that would be called a stock investment. And that means that it's not the company's own stock. It would be like if McDonald's had stock investment, that means they bought stock in like Microsoft. Okay. And what that means is if they need cash in a hurry, they're going to sell that stock. Just going to sell it. And so that is why stock investments and debt investments go right under cash. They're just short-term securities. So they go right under. So it's a store of value for future profit. I guess that's a good way to describe it. Now, a debt investment, there are actually financial instruments where McDonald's can loan money to another company through a debt investment instrument that pays interest. Okay. They're called bonds. And so, again, because they're publicly traded, it's easy for McDonald's to say, I don't want that anymore and sell it. So debt investments, stock investments are where companies put their extra cash temporarily so that they can make a little interest or capital gain off of them. But if they need that money, they're real quick and easy to sell. Okay, so they go next, and that's that liquidity. Okay, next is accounts receivable. And in America, how fast do we have to pay our bills? Adam, you are right. Forgive my typos. I'm trying to get right with speed. So we usually have 30 days to pay a bill. So you borrow the money or you charge a credit card. So can somebody define accounts receivable for me, please? What is accounts receivable? You may not know. If you don't know, say, I don't know. Money owed by customers, suppliers, and vendors. Ooh. Money owed by customer, stop. Not suppliers or vendors. Money owed by debtors. It could be, it is technically a debtor, but the way it works is if Kenworth Trucking sells a truck to a dealership, the dealer says, I'm ordering a truck. They don't walk over to Kenworth and pay $200,000 in cash. They say, send me a bill and I will pay it. I will issue you a check and pay you. Okay. So in that 1 month period, Kenworth sells the truck, let's say January 1st or January 2nd. But the dealer, the trucking company, the person who's buying the truck doesn't pay the bill until January 31st. But they already have the truck. So the exchange has been made. So exchanges are important in accounting. So there's been an exchange. So the buyer got the truck and the buyer promises to pay in 30 days. And so during that period, we say, Kenworth Truck has an accounts receivable from its customer because the customer owes the money. We've provided them the truck. They haven't paid yet. Notes receivable are similar, except they're for one amount of money and they have interest. Inventory would be like anything Walmart buys with the intention of reselling. So now supplies are different. So for Walmart, supplies would not be inventory. For Walmart, supplies would be like computer paper or cash register tape or printer cartridges. Okay. And then prepaid insurance, why is that an asset? So let's talk about liquidity. The accounts receivable about 30 days. Notes receivable maybe 30 to 60 days. And those days are when they're going to turn to cash. So accounts receivable turns into cash when the customer pays the bill. Inventory takes a little longer. The company has to buy the inventory. The company has to ship it to all the stores. Once it's at the store, it has to get stocked on a shelf. And some inventory doesn't move really fast. It might take a while to sell. So that might be another 30 days. And then it gets paid. So that's a longer timeline before it turns to cash. Supplies would be things that the company buys and maybe doesn't use up really quickly. Maybe they buy supplies for 3 months out. And then prepaid insurance would be, we always have to pay our insurance in advance. Those of us that have cars and car insurance. So usually we pay for 6 months ahead of time, about 6 months to a year ahead of time. So the order, does that answer your question, Rowan? The order is how fast it's turning to cash. Okay. And then long-term investments, I don't really worry about liquidity for long-term investments. I just take them and put them in the order that I got them. Property, plant, and equipment, I always list land first because property means land in this context. Plant means building. We don't have any buildings here. And then equipment. And then under the account, you put less accumulated depreciation. Okay. Then for intangible assets, so let's go back and look. We were looking at that yesterday. Let's see. So they have some nice definitions here underneath. But intangible assets are things you can't touch, but they still have value. Goodwill is one. Patents. So a patent means, I'm the only one that can produce this product. You can't. It has value. Copyrights. I'm the only company that can publish this book. trademarks. We were talking about the Nike swoosh yesterday, or trade names. So all of those things that gives the company the right to produce a product. Okay. So going back to the Franklin Company, they have a patent for $3,100. Okay. And then current liabilities, I think this might be where you have the question, Rowan.
Honestly, it was just like, so for assets, like you see how it says like cash, and then it just like, does that list matter? Like in
It
whatever
does matter.
order?
Yeah.
Okay.
Yeah. So you need to get this. So what I would do is I'd open this up and then I'd make a really nice cheat sheet to use as you're doing homework and studying so that this can help you memorize that order. I was talking to Jabril yesterday and I was saying, well, just print it out. And I realized that most of my students don't have printers. You guys don't use them. So unless you're coming to campus and you use one of the campus printers, it's probably better just to handwrite it out. And actually, I already said it's better to take handwritten notes anyway. So, all right.
So to recap, order of liquidity affects not just assets. It affects.
It affects current liabilities also. Okay. So,
Oh, anything
current-
current?
yeah. So current liabilities would be anything that you have to pay within a year or less. Current assets are any assets you expect to turn into cash, like accounts receivable turns into cash when it's collected, or you expect to use up. So like supplies, you're not going to turn supplies into cash. But let's say you have a supply room and it's got paper and toilet paper and paper towel, lots of stuff in there. Okay. So you look in and you say that's about a 6-month supply. So you expect to use it up within a year or less. So current liabilities, typically we put either accounts payable or notes payable first. If one doesn't work, try the other one. I wish they would make that consistent. I don't know if you guys have already started the homework, but I think this textbook puts notes payable first, but it might put accounts payable. Okay. So notes payable, again, single amount with interest. Accounts payable would be all those little purchases that companies make. So that is when it's, so Adam, you had said money owed by customers, but it's not suppliers and vendors. Accounts payable is money the company owes to suppliers and vendors. So let's think of a restaurant. They call up, let's say, Food Services of America, which is a wholesaler, and every day they put in a food order, or every couple days. And then Food Services drops the food off at the restaurant so that they can cook the food that day. They're not going to turn around and pay them in cash. Food Services is just going to send them a bill, also called an invoice, and then the restaurant is going to pay it. Okay. All right. Long-term notes, long-term liabilities. Often they will say long-term notes payable, and that just tells you it's a long-term liability. So see how all these have payable, 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 payable. The only exception is unearned sales revenue. So that's an outlier. That account has the word revenue in it, but because it's unearned, it's a liability. Arian, I don't know the answer to that. I think it wants accounts payable first, but you can try both. So, oh, for the quiz, no, that would be accounts payable. I thought you were talking about the homework. So no. All right. Okay. And okay, so I want you to just, anything that ends in payable is a payable, and you have to decide if it's short-term or long-term. We don't have the 4 categories. We just have 2 for liabilities. And then unearned sales revenue. Does anyone know what that is? Can anyone give an example of that? I mean,
No, I was actually pretty stuck on that. I keep forgetting what that means. I know that it's not typical revenue though.
so for every transaction, in chapter 3, we're going to start doing journal entries, but for every transaction, there's an exchange. And so if this were not Franklin, if this were an airline, Alaska airline, for example, and Judith, bought an airline ticket so that I could travel in June or July. And let's say my ticket costs $500. So I give Alaska Airlines cash and they sell me a ticket, but that ticket is for the future. It's not in April. It's going to happen. That travel is going to happen in July. They cannot call it revenue because they haven't provided the service yet. So they take the cash account increases, and they say, we have a liability to Judith because we owe her a trip. We owe her a trip. We can't call it revenue yet. After we provide the revenue, we'll take it out of unearned revenue and put it into revenue. But for as long as it's a future revenue, it's unearned. And we love it when customers pay early. We love that as businesses, but you can't call it revenue until you've provided the service. So this is a prepayment by a customer for future services. Okay. And they don't tell us what kind of a business Franklin is. We don't know, but it's a service business. Okay. All right. Hang on, I got accounting 203. Student wanting to come in. Okay, all right, so stockholders' equity is the same from chapter 1. It's got common stock and retained earnings. Okay, so let's do this really quick. I did it with Jabril yesterday, but I'm going to do it again. And I want you guys to call out the answers, okay? And really quick, okay? Tell me what is an asset here and what order. So what's the first? So we're just doing the assets section of the classified balance sheet, okay? And this accounts receivable is listed twice, so you don't need to. It should only be there once. So okay, all right. What's the first account that needs to go in here? Call it out or throw it in the chat.
Cash.
Yay! What's the second one here?
Accounts receivable.
Accounts receivable.
What's the second one?
Oh, debt investments.
Investments.
Yeah, so and we don't use debt investments or stock investments a lot, but they do need to go next. And we did have a debt investment. Oh, wait a minute. Look
It's
at this.
long-term though.
So we can put it under long-term investments. So you guys were correct. Accounts receivable. Okay. So I'm just going to write this down. Cash. Cash. And then accounts receivable. What's next?
Inventory.
So that looks right to me.
Inventory.
Oh, Adam, is that because the short-term debt investment could be collected sooner than an, yes, that would be the first thing to go if you needed extra cash. Yeah. Okay, so we got cash, we've got accounts receivable, inventory. Do we have any other current assets?
Prepaid insurance.
Yeah. And you can abbreviate that like that. Okay. And anything else? Anything else for current assets? So no, that is. And then what's the next category after current assets?
Wait, I must have missed it. Did someone say prepaid insurance already?
We did, and it's in the
Okay.
chat. You can see them. You see cash, accounts receivable, inventory, prepaid insurance. And then after that, we do total current assets. And then what would be the second section on the classified balance sheet?
Long-term investment, right?
Investments.
So it'd be LTI, and then what would be under LTI?
The debt
That-
investments.
That would be your debt investments. And if you're like me, you have to fight not writing it as debit. Okay, investments. Okay, long term. Okay. No other long term. So what's the next category?
Current liabilities.
No, we're still in the assets.
Property,
Yeah.
plant, and
Categories.
equipment.
Mhm. Property, plant, and equipment, which we can call PPE. And then what do we have for PPE?
Equipment.
Yeah, so equipment would be next. And
And
then
then the
what?
accumulated depreciation.
Equipment.
Yeah, good. And we'd subtract it. We'd say 10,700 minus 2,700, and we'd calculate the net. And then what's the fourth? And that's the last. And then we do a total PP&E, or what we call a net PP&E. And then we do what? What's the fourth category?
Intangible assets.
Intangible. And what do we have here?
Trademarks.
Trademarks. I know it's kind of hard, right? So you guys are learning a lot of new vocabulary. So here we go. 4 accounts in order, a total. LTI, long-term investments, property, plant, and equipment, and trademarks. Okay. All right. And then we talk more about accounts, they give more detail on the current liabilities and long-term liabilities, and then stockholders' equity. Okay. All right. So here is a whole list. This is a very typical quiz question or a test question. Here's a list of accounts. Make me an income statement. Make me a balance sheet, a classified balance sheet. And so what you need to do here is go through this list and identify them as what group do they go in. And so when you see service revenue, that doesn't go on the balance sheet. That's income statement. So it would be non-applicable. And when you see expenses, that goes on the income statement as well, right? And then the rest of these you'd have to just identify. And these are all, I guess they're all over the map. So do you have any questions on any of the ones in this list as to what category it's in?
Investment in real estate, would that be long-term investments then?
Yes, it would. Yeah, that's a good one. So that word investment, the other way they describe that is real estate held for sale. Okay. But whenever you see that word investment, it's either right under cash if it's short term, or it's under long-term investment.
Is mortgage payable a current liability?
No, because see the description, due in 3 years.
Oh.
So it has to be less than 1 year. Okay. I
Or
have a
1 year
question.
max, right?
Yeah, 1 year max. Okay, here's a question for you. Long-term note payable. Ask me any question you want about that. Long-term note payable, $40,000, 10,000 due in 1 year, not on 1 year, in 1 year. Okay. So where would you put that one?
So would the 10,000 be listed in a current liability, and then the remaining 30,000 would be listed in a long term?
Brilliant. Yes. So current lives would say long-term note payable. And then under long-term liabilities, $30,000. Just like who said it? Adam, did you say that? Oh no, Arian. Okay. Okay. All right. So you really have to read this description. Okay. Okay. And then the last piece was earnings per share. We're just about out of time, but I wanted to get to it anyway. And then what I like about, what I was going over with Jabril yesterday is go through the chapter. Maybe you guys are already doing this, but I remember being a student and I would just go straight to the homework every time. And then I'd sort of flip back to the chapter to look for hints. But actually the books have gotten better since I was in college. So they do a lot of questions and then they give you the solutions below within the chapter, inside the chapter. Okay. So you can practice on those and build up your confidence. Okay. So the question is, are these ratios on the quiz? You knew that. I knew that was coming back. Okay. We have different kinds of ratios. And so let's see what they gave us this time. Where's the ratios? We got earnings per share. Is there any other ratios you guys have to know? And working capital. Working capital, current assets minus current liabilities. And current ratio, current assets divided by current liabilities. I don't think you have to memorize the ratios. I haven't looked at the quiz lately, but I don't believe you do. And debt to asset ratios. You got quite a few. So let me give you a hint. Debt to assets ratio, they do kind of tell you how to calculate it. You put all the liabilities, which is another word for debt, and you divide by assets. Current ratio is only the current assets divided by the current liabilities. You do not need, so know those two. Current ratio, you should know, and debt to assets. EPS, they'll give you, I think, more information. They should. Let's see, take a quick look at the quiz. Let me just do that.
Will the financial reporting principles be important to memorize for the quiz too? Or is it mostly those formulas and the classified balance sheet?
So they might give you some general questions on the theory.
Okay.
So, all right. Let's take a quick look at the quiz. I'm just gonna look. So it'll be 10 questions for your quiz. And I'm looking really quickly. So you do need to know debt to assets. So that ratio is pretty much how to calculate it is right in the ratio. And current ratio. That's it. And some theory and some calculations, okay? All right. I think EPS is a little more complicated, so. Can you go over earnings per share, question 11 in the homework? I can, but Jabril will have to leave because he hasn't done the homework yet. Can I go over it in theory and have you do, and then he could stay. So let's look. So question 11 in the homework. Now let's take a look. So you know you guys have a list of the homework that's in the Canvas under the homework. And you can go to end of chapter homework and look at your homework early. Go to exercises. And question 11 on your homework is actually exercise 8. So let's look at that. So the reason it's highlighted is because I highlighted it, okay? So what is the formula for EPS? You can call it out or you can, hi,
It's
Stephen. Go ahead,
is it
sorry.
is it the net income divided by the average of shares remaining?
Almost, that's very close.
It's
So,
net income minus dividends divided by the average.
yeah, so it's net income minus preferred dividends. And you don't even work with preferred dividends in this class, but it's a different kind of stock divided by average shares outstanding. Okay. Okay, so what's net income for 2022?
$66,176,000.
Yeah, and you don't need to add the million there. Don't worry about it because oh, yes, you do. I'm sorry, I take it back.
Because it's in thousands, I think.
Because it's in thousands, yeah. So
That's
you
why I
need
had
to add,
issues with this question.
you
'cause it
need to
wasn't
add
the right
3
number.
zeros here. And then you can't just divide by this. You've got to do an average, okay? So how do we do an average? Okay. Let's say you want to average two numbers. One number is 10 and the other number is 30. How do you average that?
Add them together and divide by 2.
So if one number, average two numbers, 10 and 30. So somebody just says add them together and divide by 2, okay? And that number is going to be what?
20.
It's going to be 20. So it's got to be between 10 and 30, right? All right. So to do that here, you say as of 2022, you'd add this number plus this number and divide by 2. But you're going to do the same calculation for 2021. And you're going to go 54,587,000 because the numbers are in thousands. You're going to take the 2021 common shares and the previous year 2020 common shares and average them. And in both years, there weren't any preferred dividends. Okay. All right.
Wait, so the 66,000 net income loss is actually 66 million?
Which number exactly?
The one in the green.
This one here?
Yeah.
That number, because all the numbers except shares, except the shares are in regular numbers.
Mm-hmm.
These numbers above are in thousands. So this number is really, net income is really 66,176. And the previous year is that, okay?
Mm-hmm.
They added a level of complexity to this problem. They're testing whether you're reading and whether you understand what you read. And this is probably, I am guessing, the first time you've seen something that says dollars in thousands before. When you guys get your statements, you're going to see at the top dollars in thousands or even dollars in millions at the top. And it's just a way to make the statements a little easier to read. You don't want all those zeros on it. Okay. Okay, so that covers that, and let's look at, hang on just a second. We have let's check one more thing. Okay, so this is what's happening next week. I haven't updated this yet. Let me see. Yeah, I haven't updated this yet. So these dates are no good. But this is what we're looking at for next week. Okay, this is what we're looking at for next week. I don't have the dates right. We've got journal entries in chapter 3. So you really need to read chapter 3 and watch the videos. We're gonna play Monopoly next week. You're gonna do it online on an online Monopoly. After you turn your Monopoly in, you'll get up the next morning and you'll be assigned somebody's Monopoly work to check. So, and you have a couple days to do that. And then after somebody's checked your Monopoly, you have a day to correct any errors before you and resubmit, and I'll grade the corrected version. And then after next week, the following Wednesday, we'll have a exam. Okay. So we'll go over all of this next week, but I just kind of wanted to give you a heads up, and I'll have those dates corrected. All right. Do you guys have any more questions? We
I
kinda
do.
ran
Will there
over.
be study guides for the exams or no?
Yes, there will be a practice exam that, and you can see it.
And would the practice exam be pretty much similar to the real thing?
That's always the
Not-
question. I
not
get that
exactly,
question
but
every single course. It's going to be exactly the same with the exact same numbers. Not. No, sorry. But it's close. It's what I tell students is if you go to chapter 3, there's Monopoly. We're going to do something called an account ID quiz, and here's the practice exam. Okay. And you're going to do it on the discussion board. And I really encourage you to build in enough time to go to FedEx or come to campus and print out the exam, maybe 2 copies, and practice it. So here's the deal with my practice exams. If you work really hard and you don't look at anything else and you just study the practice exam, you will pass the exam. Okay. Unless you just forget everything and, you know, have a panic attack, which does happen, but not usually. What I tell students is go back and review my PowerPoints, go back and do more practice homework. And my PowerPoint has sample problems in it. Make sure you stop the video and make sure you know how to do the sample problem. That can be really helpful for studying. And you know, take another look at your textbook and problems at the end of your textbook. It's knowing the practice exam will probably get you to a passing grade, maybe even slightly better, but I don't think it's going to guarantee you, because there might be questions that aren't represented on the practice exam, but that are covered in the material. Okay.
So all like the categories and stuff, it's in the practice exam are the same like categories and topics in the actual exam.
Right, but the sample problems might not be identical to what's on the exam. Okay.
sorry, I think my audio cut out. You said that something about a passing grade if you only do one sort of studying.
If you only do one sort of studying, if you just sit down and work that practice exam over and over again, well, there might be a different type of problem under a category. And some students just flip out if it's a different problem. It's not identical to the practice exam. So you may not be as ready. That's all.
So practice exam plus reviewing the slides plus reviewing the textbook, just
Yeah.
a mix of things. Okay.
Yeah. And take another look at the chapter material. Make sure it looks familiar to you, you know, that kind of thing.
And
And
when you,
would
oh, sorry.
when would like creating like Quizlet decks with terms and concepts to like flip through to memorize, would that be an efficient way to study? Because memorization helps me study, but I don't know if that's an efficient way to study accounting, because I know that doesn't always work for certain subjects.
So I have set up what's called account ID quiz, which is like that, but it's only dealing with like, what kind of account is it? Where does it go? You know, that kind of thing. So if it's stuff outside of that, I would definitely make flashcards or Quizlet.
Okay.
And
And
when you
then-
mean, oh, sorry.
Go ahead.
And when you mean like it's like a different question, do you mean like instead of like a balance sheet, it's like an income statement, or is it just like another balance sheet but just with different numbers and such?
So it'd be a smaller problem. It would be like prepare the current assets section of the balance sheet, or prepare the current liabilities section. So maybe you only studied the current assets, or maybe you looked at a problem that was calculate how much. So let's say a company buys a piece of equipment, Okay. And they pay $100,000 for it. Okay. Okay, that's $100,000, but we're gonna see in chapter 3 that maybe they put $10,000 down. So how much do they really owe on the equipment? So it's just manipulating numbers a little differently. So that's where your algebra comes in. For test anxiety, boy, that's a good one. I think that I think all of us get test anxiety from time to time, and I know I do. Sometimes I have to give myself I have to just pause in the middle of the test and just do some deep breathing. And I can tell you it doesn't work all the time, but I think if you can just find some grounding moments in there and just say, just breathe, you know this, you've studied this. And I also think mnemonic devices can be helpful. So like looking at the classified balance sheet, the assets section has 4 sections, right? Current assets, long-term liabilities, property, plant, and equipment, and trademarks. And coming up with like a, C, L, P, I, C, L, P, I, and coming up with some sort of way to remember that order, that kind of thing. For me, that can be helpful. I know I was in the middle of my national exams and I had test anxiety and I literally had to just stop and do some deep breathing. That was the only thing that got me back on track. And I also had to think about happier thoughts. I just kind of thought about my family for a little bit, thought about happier stuff, and then I could come back for the test. But that time it worked. So I can, and I'm not the expert on test anxiety, but I think there is some sense of the other thing that I think really helps for testing. This is another thing, is muscle memory. And so because we've become so digital as a society, and then you sit down and you take a paper test, if you actually print out the practice exam, take notes, do practice problems, holding a pencil in your hand, your brain has another way to remember stuff. So, okay. All right. So, I don't know why I'm getting an echo, but I am going to stop the video and